Hello everyone, how's it going? In this video, we're going to talk about Mullen, trading under the ticker symbol MULN. So Mullen has been a point of interest for retail investors over the past few months, or actually for the best part of a year. The company's performance and the potential growth in the EV sector had the market focused on its share price, volatility, and the potential high returns, both of the company's own fundamentals and the sector, as well as with speculation on the short-term swings of the stock. So, in the recent past, the company's price action has been disappointing, to say the least. The price went down by more than 25% over the past 5 days, and just 5% in today alone. These developments occurred in a context of increasingly desperate attempts of the company's management to secure the listing on a Nasdaq, allowing Mullen to raise capital with relative ease given the exchange's standards, liquidity, and popularity. In order to keep the ship afloat, Mullen decided to reduce the number of shares of the same cake size, which means that the overall value of the company remains constant, although dwindling nevertheless. There is simply less shares out there, and I do believe that these efforts are going to be in vain if there is no significant catalyst coming up. So far what we have is a promise of the CEO to improve the operations, an open letter of the same CEO to investigate on people with short positions on the stock that he interprets as malicious behaviors, and the symbolic first sales of Mullen vehicles to some entities. The last aspect, in my opinion, is very interesting. I believe that under a normal circumstance, the company may be able to recover much of its former losses, but when the stock evolves in a bearish market, the market participants tend to be far less lenient towards it. The latest news concerning Mullen involves a Class 3 vehicle purchase order from the NRTC Automation Group. This information didn't really generate that much positive feedback, as the order of the 3 vehicles does not really significantly impact the company's outlook. But I want to go a bit further than that. I think that this symbolic sales did not deliver the symbolic effect. Overall, people remain pretty pessimistic about the company itself, with or without reason. The vehicles are set for delivery in Q4 of this year. This news also puts some revealing light on Mullen's ongoing challenge to obtain the EPA certificate required for their operations. We should expect some quick progress, or at least some, emphatic progress on this front. In the equities market, when penny stocks like Mullen tend to occupy a unique and volatile positions, those stocks can also experience very dramatic fluctuations in response to many factors. Amongst these are the rise of interest rate, the high inflation, the looming recession, the geopolitical instability, and the search for safe havens that stand out as key drivers that significantly impact the demand for trading behavior of penny stocks. This analysis delves into how these factors interact and influence the retail traders' interest in Mullen, while also highlighting the importance of transparency for such stocks. Interest rates play a very pivotal role in shaping the market dynamics. As central banks continue to raise interest rates, borrowing rates will become more expensive, which may affect the consumer spending, business investments, and the overall economy growth. In the context of penny stocks, this may also translate into more volatility as traders react to changes in interest rate policies. A rise in interest rates may prompt traders to reevaluate their investments in higher risk assets like penny stocks, including Mullen. High inflation compounds this impact as well. Inflation erodes the purchasing power of money, causing investors to seek return elsewhere. Penny stocks, with their potential for rapid gains, can attract some traders looking for avenue to offset the effect of inflation, but the relationship is very complex. Some traders may see penny stocks as a hedge against inflation. Others might view them as a riskier asset during periods of rising prices. The prospect of looming recession adds another layer of complexity. Economic downturns are often accompanied by decreased consumer spending and business activity. For penny stocks, especially those with an industry point of view, this may result in reduced demand and lower trading volumes. The perception of increased risk during recession times may also lead traders to avoid those positions, like Mullen. Geopolitical instabilities, whether due to conflicts, trade tensions, or other kinds of factors, may significantly impact the financial market. In those scenarios, traders tend to seek safe haven assets that are perceived as more stable stores of value. Traditional safe havens include gold, bonds, and blue chips. So, this increased demand for safety often leads traders to reduced exposure to penny stocks like Mullen, which are generally associated with higher risks. For Mullen, the combined influence of those factors may lead to additional volatility and fluctuations. When interest rates increase, the traders might become more cautious and reevaluate their positions. High inflation may create both opportunities and risks, with some traders attracted to penny stocks' potential gains and others really shooed away by the higher risk profile. In the face of a possible recession, traders may pull away from penny stocks altogether and choosing more stable options. Now, overall, I would say that the transparency is very crucial in investors' confidence. And this is especially true for penny stocks such as Mullen. Penny stocks often lack the same level of scrutiny and reporting requirements that larger, more established companies certainly do. Traders are therefore naturally hesitant to invest in companies that don't provide clear and accessible information about their financial health, and I think that Mullen is one of those. Investors are not likely to shy away from penny stocks just because of the lack of transparency as a whole. But the lack of clear information does leave traders vulnerable to potential scams, frauds, and potential market manipulations. A company's willingness to provide transparent and accurate information that are also timely may significantly influence traders' decisions on the confidence level that they're willing to give to a company such as Mullen. Now, given the current information, I would say that Mullen is a company that's best not to touch even with a 50,000-foot pole. That's probably just because we don't know what's going on. There are things that don't necessarily make sense. For example, where did they get the cash? And also, is the company simply buying more time before they write an equally convincing blog post, compared to like their other propaganda messages, that they've tried their best, but it didn't work out. So best of luck next time. What if this is what they deliver? Yes, there's going to be an international arrest mandate, but then again, those kinds of stuff, a lot of people have them and they can afford the luxury of living comfortably just in countries outside of the Interpol jurisdiction. So this is why I would say that Mullen is certainly a stock that we should keep an eye on, but we shouldn't put too much risk into it. Or rather, we shouldn't put any exposure into it for the time being.